Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we get into markets this week, really a lot to talk about what's going on specifically on the market side of things. It's been a really tough week on the hog side, but it looks like there's a little bit of relief on the cattle side of things this week.
Yeah, that's true. We got higher prices on the cattle side and certainly lower prices on the hog side. I'd remind us cattle prices have been moving lower for several weeks in a row, so it's nice to see a little bit of price strength for a change. If you look at markets for the week, I'll say cash hogs off nearly $4 a hundred for the week. So again, very tough. That pork cutout value was down $2.80 for the week. Again, led in large part by where belly prices went for the week, down $11.77. We've been talking about where belly prices have been this year relative to a year ago for a long time, but this week they're now just 18% higher than where they were a year ago at this time. So belly prices have moved down a lot. They've lost 47% of their value in just the last month. So it has certainly been a little different situation when we look at these pork markets this week, Megan. On the cattle side, fed cattle, I'll call them $1.50 higher for the week. When you look at the feeder cattle side, I would say we're steady to 6 higher. Actually seeing pretty good demand when you look at that feeder cattle side, and I think adequate pasture, wheat, pasture, feed, lower feed costs all have helped make feeder cattle prices remain fairly steady. When you look at that choice beef cutout, we were down $1.40 for the week. Really a lot of weakness across the board when you look at those primals making up that choice beef cutout value. On Tuesday, the first time since the end of January of 2014, we saw the select box beef price actually be greater than the choice. So it certainly has been a change there from the record spread we saw not that many weeks ago. But those are the markets for the week.
Scott, as we take a look at, we know it's been a rough go of it recently, especially on the hog side, really on both sides of things. But as we look ahead to October, can we maybe anticipate a little bit of a bounce as we look at a little bit more demand as we highlight it being October pork month?
Yeah, so perhaps we can. I remind us that we're getting into some very large supplies for the remainder of the year. I don't think we have maybe the same kinds of declines coming that we would have seen in cattle and hog prices a year ago. And hopefully with a little more featuring on the pork side, we can start to pull out of what's been a much lower trend of late. But this idea we got more supplies coming is a big part of the picture we're going to have to continue to stay focused on.
And we'll get into that a little bit more later. Let's start first and talk about some of the reports this week, really on the consumer and on the retail side of things. We're going to look at a little bit closer. Consumer confidence came out. Let's talk a little bit about that and maybe some of those factors that influence those numbers.
Yeah, so when you look at the what we got this week in terms of consumer confidence, that overall index fell 1.5% in the preliminary September numbers relative to a month ago. All else equal, that might give us a little bit of concern given we are talking about lower numbers. However, I think there were some folks who potentially were in that survey that were impacted by at least Hurricane Harvey, if not others as well. So I think that had some effect. I don't want to be too negative, but again, talking about where prices can go, if that's the start of a trend of lower consumer confidence, I do worry about where meat demand might go for the remainder of this year. When you look at that current situation, current economic condition situation, it was actually up 2.7%. So that is, some of the good news we see out of that report. When we look at expectations, the other part of the component, that was the one that was down 4.9. So people looking ahead and being a little less positive. We'll hope that isn't where we end up at the end of the day, but a little mixed bag in terms of what we got out of consumer confidence this week.
Retail prices, another report that was released this week. As we take a look at that, are we seeing some surprises as we get into those numbers on the beef and pork side?
Well, I think we can take pork to start with, Megan, and number one, you keep these belly prices that we talk about at the wholesale level at record levels, and eventually those do get translated through to higher retail prices. That August retail bacon price was reported at $6.24 a pound. That was over 7% higher than just the previous month, and that was a record. So we certainly have seen bacon prices move through to the retail level. It gave us another 10 cents on that pork retail price out of the report as well. So higher prices at the wholesale level got us some higher prices for consumers. The flip side on the beef side, beef retail prices actually down about 13 cents on the month, as we've again seen things like the choice beef cutout move lower. So lower prices, all else equal, means we can move a little more product to consumers on that beef side. So a mixed bag there. As belly prices have been coming down, I'd also expect as we look ahead, we'll also get some slowdown or decline in that retail bacon price as well.
I won't complain about that. I know when I've been making my bacon purchases at the store recently, it is significantly higher than it had been a year ago.
That is absolutely true. And let's just hope that consumers never find a good substitute for bacon when we have these kinds of record prices that we're running at them. So we can keep that bacon demand as strong as possible.
I don't know if you know this. I did grow up on a hog farm, and my dad's philosophy always was, and would tell other people to make sure they support their local pork producers, because everything is better with bacon. So that's the philosophy I live by.
Absolutely. We can always find new ways to use bacon and make everything else taste even better.
Scott, the big report this week that's been the discussion on the ag sector and in the ag sector is the WASDE report. As we get into that, some surprises on the yield side of things, especially I think as we get into harvest you're starting to see fields pick up, and you're seeing some pretty decent numbers despite that really rough start to the year.
Yeah, gosh, if I'm a livestock producer, I cheer the report that we got out of USDA this week. And I know that's not where folks expected yields to come out, but a 169.9 on corn and a 49.9 on soybeans certainly to me means we have bigger crops going to be in the bins than maybe we thought earlier in the year. We'll still be down in terms of overall corn production and maybe close to 1 billion bushel lower when we get this crop harvested relative to the previous year. But the good news of all this from a livestock perspective is large supplies keeping prices pushed lower. We need that right now. When you think about what's been happening to cattle and hog prices, the idea that corn prices could move even lower keeps what in many cases will be 60% or more of the input costs moving lower as well. So getting lower costs with these lower output prices on the livestock side is nothing but very good news. Now, that crop is not all in the bin, but and certainly a lot of analysts who felt like, for example, corn yields were going to be down. The fact that USDA had them higher in this last report, maybe the crop's going to give us a little better yield than we thought, and perhaps the technology that we're seeing in place today that really probably was invested back when we had record crop prices is changing the yield outlook that we have at times.
But does that also have potential negative effect on? I know we look at the lower input prices as it comes to livestock production, but does that maybe hurt us in the long run on production side, that maybe we're feeding a little bit longer and we're putting more meat into the market eventually?
Yeah, absolutely. There is some balance here, right? That we have to strike over time, and the last thing you want is to end up in a situation where feed prices are so low that we do things we otherwise wouldn't have. And I say do the things at feeding for a longer period of time is certainly one of them. And we don't need more supplies of beef and pork coming from slaughter weights unnecessarily when we're already making very large slaughter runs on both those sides as well. So there is some balance to be found when you look at feed prices versus livestock prices. I look back and I go, much of what we've seen in terms of where markets are today, one could trace some of that responsibility to the very tough yields of 2012. In some ways, I'll say those yields synchronized ag prices across the board is about as good as I've seen a set of heifers ever be synchronized with drugs today. So the idea that there's no good alternatives from an output standpoint many of our folks that are in the livestock business may also be in the crop business, and finding those alternative enterprises that help on the bottom line of producers is pretty tough, given that we've had them all cycle to much lower levels relative to where we were just a couple, 3 years ago.
And we're going to talk a little bit more about production, and I want to make sure we get into that. But also on the WASDE side of things, there was also some reduction on the beef and chicken sectors.
Yeah, absolutely. So they lowered 2017 beef production by about 140 million pounds, about 200 million pounds lower on 2017 chicken production. We'll take every little bit of that reduction that we can. When you look at total per capita meat availability, still expected to be up about 2.6 pounds for this year. That's about 1.2% higher. We're really setting ourselves, though, up for what's USDA saying a 3.3 pound increase next year. So 2 back-to-back years of pretty good increases in per capita meat supplies.
Scott, as we round things out this week, we've alluded to this a couple of different times. Production, as we look at some of the slaughter numbers, we've had another really big couple of weeks in both the beef and hog runs, and production's not slowing down at all.
Yeah, so much of what we knew would be coming as we close out 2017, we're starting to see in the numbers that we get. When you look at beef production for the week, 526 million pounds of beef produced. That's the second highest weekly beef production since June of 2011. You look at the pork side, we were producing about 506 million pounds of pork in the last week. You add those two things together, that's the 7th highest ever combination of beef and pork production, and that's ever. There were only 6 other weeks higher than that. Those 6 weeks occurred when? They occurred last year, mid-October to mid-December. And we know we're going to get some larger runs of hog slaughter as we get through the latter part of this year. So we know we're not done. You know, we've already sat here talking about the 7th highest combination ever, and we probably know as we go through the remainder, we're going to potentially keep bumping up to higher levels. I do worry about weights. You know, we've been able to run both hog and cattle weights lower relative to a year ago, but we're seeing both of those move up as we've come more current. So not only are we slaughtering more animals, but we're slaughtering them at heavier weights. That combination just pushes production that much higher.
The demand side, always a factor.
Let's hope for really strong demand as we get through the last several weeks here of 2017. We're going to need it as we push pretty large supplies out there. And that demands both domestic and international. You know, we'll look at both sides of that picture as we round out 2017.
Maybe we should start pushing for Thanksgiving hams and brisket opposed to turkeys, to take nothing away from the poultry side of things.
It might be cheap enough that those will be what we use instead of turkey. That's for sure.
Scott, anything else this week?
I think that's the major issues for the week, Megan.
All right. As we preview next week, another big week of reports on the livestock side, what are some things that we're looking ahead to?
Yeah, so we're going to get livestock slaughter next Thursday. That'll give us another little taste of where slaughter weights are headed, as well as slaughter numbers. And then we wrap up the week with both cattle on feed and cold storage. So it'll be very interesting to see what the placement number looks like on the cattle side. I'm going to be curious to see if we're holding some of those calves back out on wheat pasture or other pasture as weather's been good in some parts of the country. So that might give us some positive news on the cattle on feed side. And then, of course, are we backing anything up in storage at this point? All those things will give us a little more insight on the supply side of the industry next week.
Scott, have a great week. We'll talk to you next Friday.
You too, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. Click on the subscribe link. You can also submit questions and comments there. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend and a great week. I'm Megan Grebner on Brownfield.